intention to hold the price where it currently sits?
Well, I think that both technically and fundamentally, the oil price right now is just ridiculously low. And even though the world economy is in recession, even though inventories are high, I think we've overshot what I'll call a normal or trend value for oil prices by 5 standard deviations, maybe as many as 6, which is as far to the downside as we were to the upside before. So I think we've got a downward price bubble in oil. The unrest in the Middle East is one of a number of factors that I think are going to drive oil prices back up toward maybe $90 to $100 a barrel over the course of this year. It doesn't really change my inflation outlook for this year, but it kind of moves us on a month-to-month basis into higher oil prices.
No. Come on. Come on. What are you? You're an economist. Okay. We've seen the greatest plunge in world trade really since the 1930s. We could be talking about a nominal contraction in GDP in the major economies of the UK or the US. That's almost never happened. You've got to go back to the 1950s to see that. You can't sit there. And I've got oil vessels. I've got oil floating on water around the world, right? You can't seriously sit there and ask me to contemplate that oil is going to trade at 90. That is preposterous.
But you had the same story when
we're going to take a break at that point. These gentlemen mired in controversy. We'll pick up here from Eclectica. Let's give you the right to reply. Hugh shot down your analysis that the oil price is ridiculously low and will rebound, I think, over the next 12 months.
Yeah, I mean, it's not all about economics, all right? It's about market action, all right? The market oversold oil on the way down. Fundamentally, all right, there was no economic explanation for going to 140 from 70. There was no real economic explanation for a 75% drop in prices, all right? It's a medium-term proposition, all right? The trend line puts oil around $90 to $100 a barrel. And I agree with you, in a soft economy, it's going to take a while to get back to that trend line. It may not even get back there fully. But the fact that there are tankers floating around doesn't necessarily change investors' expectations about where prices ought to go. And the fundamental supply and demand analysis really doesn't change all that much, all right, as the global economy slows down. There's some drop in demand, but not a huge drop in demand.
Before Hugh goes, should we have a situation where actually fundamentals matter again? And that's an open question to him, because yeah, there were fundamentals there where people thought it might be tight for a long time because they believed that the China story and the emerging market story was going to grow incredibly despite what we're seeing in the slowdown in the West. But the barriers to entry for a lot of traders, as Martin points out on a regular basis, are too low. Maybe we need higher margins. So actually people do have to concentrate more on fundamentals rather than anyone with a couple of quid wanting to come in and potentially being able to distort the market.
Well, that's your area of expertise, not mine.
Well, barriers to entry now with regard to speculation. Speculating in the oil price are enormously high, and it is proffering a very high return on speculation, and again I would argue it counts against what Carl's saying, because it is a phenomenally difficult task to be bullish on oil today owing to the shape of the oil curve. It is in contango, which is to say that whilst we're trading just below $40, if you go out 2 years, it's expected to trade, indeed it trades at $70, and that's why you have all this surplus oil being hoarded on these vessels at sea. Now, every day that the oil price doesn't move closer to 70 is a day of negative carry. It's a day where you're losing money being long oil today, which is why I proffer my caution on your note. Now, I'm a believer in the peak oil. I'm a believer that in this capital destruction, we're not going to be investing in looking for oil in hideous places like Russia, etc., for the next 10 years, and we need to. The world of 10 years' time, our grandchildren's world, needs us looking for the blasted stuff now, and we ain't going to do it. We've suspended all of that activity. So I agree with you to a degree, but as in all walks of investment life, it's timing, and I believe your timing is just way off.
But last time round we had a dip. All the likes of BP and John Brown at the time got involved in Russia, signed these PSAs, as indeed did Royal Dutch Shell. I think it's Phil Watts rather than the current management that did it for Shell. The PSAs got torn up when the price got above $100 a barrel. They were talking about reappropriation of national assets, whether it's in Nigeria, whether it was in Venezuela, whether it was in Russia. Who's to say it's not going to be exactly the same time this time round?
Well, you open up, I mean, how does a very unusual character like Lord Brown become responsible for a huge organisation like BP, right? Lord Brown, okay, was the most bearish person on oil in the world. And that was wonderful because oil was falling. Yeah, oil lost 80% of its value in real terms for 20 years. Yeah, and so the most bearish guy gets to the top, and then oil explodes. Yeah, for 10 years we see oil go from what, Carl? From $10 to 150, and BP in absolute share price terms goes down. Right. So you can't bring them in. They're contra-cyclical. When they're bearish, the oil price goes up. When they're bullish, the price goes down. So actually today, if you're bearish on oil, you should own BP. You should own Shell. You get a very high carry. They're unleveraged businesses, and as I say, you get about a 5%
but the
yield.
stock's done nothing in years, has it?
It's done nothing, which was a big bore. But now, flat is wonderful. Stock market's down and flat. Fantastic.
So hang on, have we found an equity you'd buy?
Yeah, the whole where we're going with regard to equity allocation is you have to allocate to the unleveraged parts of the world, and big oil and kind of agriculture would be components of that.